the way back up maybe towards the $4. So that will support right over here, right? Do you know that there are actually 5 Hong Kong stocks right now that are listed on the SGX, the Singapore Exchange, right? And you can buy them just like any other normal Singapore stocks. And one of the key benefits of doing that would be, you don't have to go through all the foreign currency conversion, and also the price of the stocks are much more affordable than if you to buy them on the Hong Kong Stock Exchange. So how do you do it, all right? And what are the top 3 out of these 5 Hong Kong stocks that you want to think about positioning yourselves in right now? Hey guys, Joey here, top tier MyDeal trader in Phillip Securities, and in this video I'll show you guys 3 of these Hong Kong stocks, what it says on their underlying chart, and more importantly how you can actually position yourselves by buying what we call the SDR, right? So they are what we call Hong Kong SDR. SDR stands for Singapore Depository Receipts. They are listed on the SGX. So you can buy this SDR. You don't have to go and buy the Hong Kong stocks on the Hong Kong Exchange, right? It's so much easier. It's like any other normal Singapore stocks, and it's in Singapore dollars as well. So later I'll share with you guys how you can do it, but let's dive into the top 3, all right, Hong Kong stocks that you focus on. Let's dive into my screen right now. So there are a total of 5 Hong Kong stocks that are listed at SDR right now. So the first one will be like Alibaba, one of the world's largest e-commerce firm. We have Bank of China, we have a BYD. Some of you might even be driving their cars in Singapore in the EV space. We have HSBC as well holding, and of course Tencent holding, one of the top tech firms in China. So these are the 5 companies that you can actually buy, all right, 5 Hong Kong stocks that you can actually buy as an SDR in Singapore. But let me just share with you guys what are the top 3. Let's dive into their charts right now. So the first Hong Kong stock like I share with you that is listed as an SDR would be this stock called Bank of China. All right, so this is the underlying listed in Hong Kong. The code is 3988. Right, so you can see, let me just go through the underlying right now before we look at the SDR. So you can see right now it is trading at about $3.59 Hong Kong dollars. So later we'll convert it to like Singapore dollars and we look at the SDR. But you can see over the past 5 to 6 months since the beginning of the year, we have turned into a pretty good uptrend, right, in terms of the longer term, just by looking at what we call the red and the blue line, which is the 100 days moving average and the 200 days moving average. So the longer term trend looks intact, since like February, March has turned up. We have found what we call higher lows, but somewhere around like July, August, we saw a little bit of a sideways consolidation with the 20 days moving average, this green line, starting to just flatten out a little bit. So support has been found, I would say, somewhere around the $3.25 Hong Kong dollars, maybe around that 350 Hong Kong dollars right over here as well, all right, and we're seeing a bit of resistance somewhere around the $4 Hong Kong dollars. You can see this is the red line. You can see that's where we start somewhere in October and we sold back down. So what could be a good entry in terms of some weakness that we've seen? Well, you can see that after heading towards the $4, all right, we have seen a bit of weakness, and there are some short-term selling in terms of the 20 days moving average line starting to post up, starting to point down, right? So I think somewhere around that 350 level right over here, there was originally the resistance. We broke, came back down. Of course, it was the resistance we broke again somewhere in like September. You can see that's where the rally started. So this resistance would now potentially be a support level around $3.50. So what could happen is that if you were to hit to near $3.50 Hong Kong dollars, you could actually buy the stock on the Hong Kong Exchange, right, in terms of a reversal to ride it all the way back up maybe towards the $4. So that would be like about 12 to 13% of upside, right? But as I mentioned, right, you can actually buy what we call the SDR, right? It's Singapore Depository Receipts, right? And you can see, just want to do a quick conversion right over here from like $3.50. If you convert it from Hong Kong dollars to Singapore dollars, how do you do it? Well, very simple, $3.50. The exchange rate right over here is 0.17. So $3.50 you times 0.17. That would be 60 cents, right? And of course, for this Bank of China, all right, there's a SDR to underline. The ratio is 1:1. So very simple. $3.50 you times 0.17, you get the Singapore dollars price, which is 60 cents. Of course, $3.25 Hong Kong dollars, it will be about 55 cents Sings, and $4 Hong Kong dollars, that will be 68 cents Singapore dollars, right? So that is where, if you were to look at the SDR, you can kind of have a gauge of where we can head to. So maybe if the SDR would head to near like 60 cents or 55 cents, that could be a potential entry. So let's take a look at the Bank of China SDR right over here. So this is the Bank of China, right? It's about $3.59 Hong Kong dollars, and the SDR is right over here. You can see the code is a Bank of China space HK space SDR, and it's 1:1 ratio, right? So you pretty much just need to times the exchange rate of 0.17 to get the Singapore dollar price, right? And the SDR, if you want to get the code, that's the code B, and D. All right, and you see it's about 0.625. So you remember, right, we talked about the support being at about 60 cents to maybe about 55 cents. So if you dip to near this support level, well, that could be an entry if you see any signs of the short-term trend starting to turn back up again, right? Maybe right over here, if you see like maybe the 20 days moving average of this green line starting to flatten out, maybe starting to point out, well, that could lead that reversal all the way back up, and you might take some profit when it approaches that 68 cents Singapore dollars, all right, for the SDR, the Hong Kong SDR. Okay, let's move on to the second, right, Hong Kong stock, right, that's listed on the SGX and the SDR that you can potentially take a position on, and that would be BYD, right? BYD company, the code on the Hong Kong Stock Exchange is 1211-HK, right? And you see right now we are trading at about 262 Hong Kong dollars. So this is the underlying. Later we look at the SDR after doing some conversion into Singapore dollars, and we can think about how we can get in on the SDR. So you can see for BYD, right, since like August, September, there will some signs of the trend turning up in the longer term as well. Just by looking at what we call the 100 days moving average, you can see, right, somewhere around last year to early of the year, it was pretty much moving sideways. We were kept below this 250 Hong Kong dollars. We see look at this retouch, we sold down, same thing right over here. We just sold down, we were below $250 Hong Kong dollars for quite a while, for more than a year, right? But somewhere around September, you can see we broke above it, and that really sparked off the start or the beginning of the uptrend. So you can see right now, in terms of the longer term trend, I think it's still potentially up as long as we stay above these 250 Hong Kong dollars, and a little bit of profit taking somewhere around 320 Hong Kong dollars to 300 Hong Kong dollars. You can see some signs of weakness. We are starting to push back or pull back or respect this resistance level and come like retrace back down, right? So potential entry could be if it were to hit back towards this 250 Hong Kong dollars level right over here. So 250 to 260, that's where potentially some bargain hunting can come back, all right? And of course, the longer term trend is up, but in the short term, right, if we were to see the trend, which is now slightly pointing down, but if you see the short term trend starting to reverse back up again, maybe by this 20 days moving average line starting to flatten or point up, well, that could be a good entry in terms of a reversal back up from 250 Hong Kong dollars all the way to 300 to maybe even that 320. All right, so how can we take a position in what we call the SDR? Well, I've done a quick conversion for you. You can see that this is like 250 Hong Kong dollars. So in order to convert Hong Kong dollars to Sing dollars, and of course for this BYD SDR, there's a little bit of difference. So you can see what we do is that you can take $250 times 0.17, that's the exchange rate, the normal exchange rate to convert from Sing dollars to Hong Kong dollars. So after doing that, right, so 250 times 0.17, what you need to do, you need to divide it by 10. Why? Well, because you can see that for BYD, it's a little bit different. Right? For Bank of China, the ratio is 1:1, right? So you just times 0.17 and that's it. But for BYD, you can see that the ratio is 10:1. So 10 underlying is 1. 10 SDR is equivalent to 1 underlying, right? So you need to divide by 10 to get the price of the SDR. So that would be about $4.25. So very simple how you do it. It's very simple. So you take 250 times 0.17 divided by 10. That will be like about $4.25. So I've done same thing, the conversion right over here. That will be at $5.44 Singapore dollars, and Sing dollars about $5.10 if it's 300 Hong Kong dollars. So let's take a look at what we call the SDR right now. All right, looking at it, you can see it's like 425 would be like support. So BYD right over here, you can see the price is about 261.40, and this is the SDR, BYD space Hong Kong space SDR. You can see 10:1. All right, the code is HYDD. So just go to any trading platform, just type HYDD, you will be able to pull out what we call the BYD SDR, and price is about $4.57 right now, the Singapore dollars price. So if you remember, right, we look at the price is about 425. So if we did to near 425 to 430 to 435, that could be a potential entry in terms of getting in on the SDR to ride maybe the reversal back up. Okay, finally, the last Hong Kong stock listed on the SDR on the Singapore Exchange, and that would be HSBC. So this is the underlying, all right, the stock code is 0005.Hong Kong, all right, the underlying that is listed on the Hong Kong Stock Exchange. But as I mentioned, you can actually buy what we call the SDR. I'll come to that in a bit, but you can see right here, this is the underlying stock trading about 69 0.55 Hong Kong dollars. So looks pretty good. I would say the longer term uptrend has started somewhere around like March and February, just by looking at the 100 days and the 200 days moving average started to point up somewhere around here, February, March. You can see that we kind of broke above that 58 to $60 over here. We're consolidating below. Right over here in August, you can see November came down finally, I think somewhere around like March, right? We went above that 58 to 60. You can see that really sparked off the start of the uptrend, right? All the way up. And so very gentle uptrend, I would say, in the longer term. In the short term, yeah, a little bit of a weakness somewhere in June and July, rebounded back up, and you can see right now we are actually attempting to find a little bit of a new high. So what are some of the key levels you want to take note of? Well, I would say that we may have found some support right over here around that 66.50 Hong Kong dollars, right? 66.50 Hong Kong dollars. Same thing, a bit of resistance at 70. You can see that we actually attempted to break the 70, came back now. Now we're just slightly below that 70. So yeah, I would expect it to potentially break it. If we can break above 70, stay above it, that would be a much firmer bullish move all the way up to maybe 75 Hong Kong dollars. So that could be kind of like the upside from here all the way up if to break that 75. Or we could also potentially wait for a trade, if it will, to maybe reverse back down towards the previous support right over here, right? If the reverse back down or retrace back down to somewhere near the 66.5 or 67, 67.5, I think that could be a good entry, right? In terms of riding back in to catch a bit of a rebound, right? Back up, right? So let's take a look at how you can take a position in what we call the SDR. Well, I've done the conversion for you. So very simple for HSBC, right? So let's take a look at this price of maybe like 70, right? So 70, in order to convert to Singapore dollars, so 70 times 0.17, and you need to divide by 5 to get the SDR price. Why? Because for HSBC, the SDR to underlying ratio is 5:1, right? So you need to divide by 5, and that's where you get the Singapore dollars price. So for example, this is the support, all right? It's about $2.26 Singapore dollars. So let's take a look at the SDR right now for HSBC. You can see right here. So this is the HSBC 69.55 Hong Kong dollars. You look down is the code or the SDR HSBC HK SDR 5:1, which is at $2.41. That's the Sing dollars. The code is HSHD, right? So the price is $2.41. If you want to buy what we call the SDR, that is what you want to go, all right? And if you were to dip to slightly to $2.25, remember $2.25 was what we calculated in terms of the support level. So 226, 230. If you were to dip a little bit, that could be an entry to get in on the SDR, right? In terms of riding, all right, the reversal all the way back up towards 238 and maybe even to 255 to 260. That's where you could potentially take some profits. So there we have it, guys. These are the 3 Hong Kong stocks that, the top 3 out of these 5 that we have right now that you can potentially take a position on. All right, not just on the underlying stocks that's listed on Hong Kong, but you can do it in what we call SDR, right? So I mentioned that you can actually buy this stock because it's much more affordable when it's listed as SDR on the Singapore Exchange, right? And you don't have to undergo foreign currency conversion and all the trouble of that, right? And doing FX fees on that, right? So much more simple. Do check out. I hope you like this video. Put these 3 stocks in your watch list. Out of this 5, I think these are the 3 top right now out of the 5 that you want to watch as well. So yeah, this is just a video to add more value to you guys and also share a little bit more on SDR, or in collaboration with SGX. I hope you like this video. Joey here. Thank you so much for watching. I'll see you in the next video. Take care.